volatility can also have a significant impact on a company's operations. For example, companies that rely heavily on commodity prices, such as oil and gas companies, may be more affected by volatility in these markets. Similarly, companies that rely on exports may be affected by volatility in the currency markets. However, market volatility can also present growth opportunities for companies. For example, during times of high volatility, companies may be able to acquire assets or companies and make strategic investments at a lower cost. Turning to slide 5, investor relations plays an important role in mitigating the risks associated with market volatility and the uncertainty it causes investors. Through effective investor relations, companies can help reduce the negative effects of market volatility on their stock prices. One of the main ways that an investor relations department can help mitigate the risks of market volatility is by improving transparency and communication with the financial community. Companies that have strong investor relations programs provide regular and accurate updates to their shareholders, which include investors, analysts, media, and other stakeholders. This information helps investors make informed decisions about their investments, reducing the risk of unexpected surprises that can cause significant market fluctuations. Naturally, many small cap companies tend to go quiet in times like these because they assume that nobody is paying attention to them with the markets in flux. However, this is exactly the opposite approach companies should take during these times. These are the times that small cap executives need to remember how they managed to attract the shareholder base they currently have, because they told the story of a compelling business with an investment thesis that attracted investors and their investment dollars. This is the time to institute guidance if they've never done so, discuss future prospects candidly, and what scenarios are in play if the underlying volatility persists. This only builds greater management credibility in the minds of investors, allowing them to make more informed decisions on the stock and what their time horizon will be. Another way that a strong investor relations effort can help mitigate market volatility is by building strong relationships with key stakeholders. By engaging with investors on a regular basis, companies can understand their needs and concerns and respond to them in a proactive manner. This can help build trust and confidence in the company, reducing the risk of panic selling during periods of market volatility. In addition, companies can also use their investor relations program to promote their growth prospects and demonstrate their commitment to long-term value creation, helping to reduce the impact of market fluctuations on their stock prices. The investor relations team should also provide timely and relevant information to investors. This includes providing regular financial reports, investor presentations, and other key financial metrics, while showcasing the company and the aspects of the business that makes the company unique. An example of this is our firm, Skyline Corporate Communications Group, LLC, which regularly holds our proprietary branded live webinar events, the Skyline Signature Series. We provide public companies with a convenient, effective, and compliant forum to communicate their story to a diverse audience of financial professionals through a live virtual presentation. These virtual webinar presentations allow company executives to present to groups of investors that they may not ordinarily meet during traditional non-deal roadshows, and this helps investors to stay informed about the company's performance and financial health, providing guidance on their financial performance and future prospects, and helping to reduce the impact of market fluctuations on their stock prices. Turning to slide 6, I'm now going to discuss some effective communication strategies that I've found helpful when dealing with investors during volatile market conditions like we've been experiencing today. First, be transparent and timely. It's always important to provide up-to-date and accurate information on the company's performance, financials, and its plans for the future, but even more so in times like these with greater scrutiny from investors. Be as transparent as possible about any challenges the company is facing and communicate these promptly with investors. Keep the message simple. In terms of market volatility, investors may be anxious or uncertain about their investments. Skip the long, drawn-out preambles and avoid using technical jargon when addressing the financial community. Provide context and perspective. Put the company's performance in the context of the broader market conditions and provide a long-term perspective on the company's prospects, because everyone wants their shareholders to be shareholders for the long term. Maintain regular communication. Regular communication with investors helps build trust and confidence. Try to schedule your earnings conference calls for the year at the beginning of the calendar year. Build an events calendar on the investor relations page and include upcoming webinars, conferences, trade shows, corporate actions and events, and other forms of communication to provide updates and answer investor questions. Address concerns. Acknowledge any elephants in the room and any concerns raised in good faith by investors, and provide reassurance that the company is taking appropriate actions to mitigate risks and capitalize on opportunities. Be an optimist. More than ever before, public communications are scrutinized for tone, body language, speech patterns, and other factors, all with the purpose of gleaning any evidence to the contrary of what's being said by the management team. Despite how things may actually be going, try to be genuinely optimistic when communicating with investors, because you'll want this optimism to be infectious with your audience. Turning to slide 7, transparency and consistency are critical factors in building and maintaining strong investor relationships, especially during volatile market conditions. In such times, investors are likely to be anxious and concerned about the value of their investments. By providing transparent and consistent information, companies can help alleviate these concerns and build trust with their investors. When I mention transparency, I'm referring to the open and honest communication of information, including financial performance, company plans, and any challenges or risks the company may face. During volatile market conditions, investors want to be informed about the company's financial health and future prospects. Providing transparent information allows companies to demonstrate their commitment to the interests of their investors, build trust, which is all the more important in the small cap universe, who are often tasked with doing more than less. This can help reduce anxiety and uncertainty during times of market volatility and ultimately benefit the company's reputation and stock price. Consistency in investor relations means providing regular, reliable, and accurate information. Companies should communicate with investors on a regular basis, whether through earnings calls, webinars, or other forms of communication, and plan on doing these at the same time next year, the year after, and so forth. This helps to build a routine and a cadence with investors while maintaining a consistent flow of information, and supports investors in better understanding the company's performance and future prospects. Consistent communication can also help build trust and confidence with investors who appreciate being kept informed about the company's performance and plans. It is also important for companies to be consistent in their messaging and tone. During volatile market conditions, investors may be sensitive to any changes in the company's tone or messaging or frequency of communications. By maintaining a consistent tone, message, and communications frequency, companies can provide a sense of stability and reliability during these times of uncertainty. Turning to slide 8, which is often overlooked by companies, is the online presence that a company maintains. It's how a company communicates 24/7, 365 to anywhere in the world, and should be a top priority since nearly everyone uses a search engine to research a company. Small cap companies need to conduct an audit of their online presence, including the corporate website, leading financial portals, and anywhere else that an investor would look for up-to-date information on the company, because they often don't have the brand recognition that can overcome a lapsed online presence. The company's website needs to be the end destination where investors can stay and further explore the company. A strong website can typically pass the cocktail party test, where an unfamiliar viewer can clearly understand and describe the company and its core business in a matter of minutes. A stale, outdated website will undoubtedly lead the viewer to believe that the company is idle or simply not paying attention, as if the windows at Macy's were filled with toppled mannequins covered in spiderwebs. Perhaps more important, visiting Yahoo Finance or Bloomberg or one of the brokerage websites is noticing the company is mislabeled as a biotech company when they're in the auto business, for instance. At the same time, companies should actively facilitate more research on the company with greater transparency. Add the most recent company investor presentation, the most recent conference call transcripts from earnings calls. As I mentioned earlier, go the extra mile. Post a calendar of events that includes industry events along with investor events. These initiatives go a long way in demonstrating that activity is continuing and that the company is moving forward and engaging with the investment community and is focused on transparency and clear and strong communications. One final note on the website, which is usually the most overlooked part, is the means of gathering information on visitors to your website. I don't mean using cookies to track visitors. I'm referring to the Contact Us page, and more importantly, the invitation to join the company's distribution list. Too often, these are buried on the website or not even there at all, and these should be accessible at the top and bottom of every page, making it much easier for a visitor to subscribe to the company's updates and press releases, collecting the visitor's name, company affiliation, phone number, and email address as part of the registration process. This will allow investors to remain informed of company developments through news, filings, and press releases, and helps to further engage that visitor once he or she has left your corporate website. Turning to slide 9, and in conclusion, effective small cap investor relations activities are critical in navigating market volatility and building investor confidence. Transparency and consistency in communication can help mitigate market rumors and speculation, provide investors with accurate and timely information, and demonstrate a company's commitment to good governance and accountability. And remember that these strategies should be reflected in all of your communication strategies, including your website and your online presence. By following best practices in small cap investor relations, public companies can attract new investors and retain existing ones, even during periods of volatility and uncertainty. So let us strive to always be transparent and consistent in our investor relations activities and continue to build a foundation of trust and credibility with our investors. Once again, I'm Scott Powell, President of Skyline Corporate Communications Group, LLC. Skyline is an investor relations agency based in New York City and Boston, dedicated to providing investor relations and corporate communication services to small and micro-cap public companies across industries and across geographies. We're made up of a senior level team with combined experience of well over 50 years in capital markets, finance, law, direct investments, and public company management experience. Our team has worked with hundreds of small and micro-cap public companies across industries, and we're a highly capable, responsive, and effective team of experts in investor relations and corporate communications, particularly for smaller public companies. We encourage you to visit our website at www.skylineccg.com, our LinkedIn, Twitter, and StockTwits pages, or feel free to email or call us directly at the address and number on your screen here on the slide deck. Thank you again for your time and attention today. Thanks to the OTC Markets Group and virtualinvestorconferences.com for the opportunity to sponsor and speak at today's conference. I would now like to invite the audience to ask any questions that you may have by typing those questions into the chat box on your screen, and you will remain anonymous. I will read the question, but not the person asking the question. Thank you again for your time and attention today, and happy to take any questions that anyone from the audience may have. So I'll pause for just a few seconds while the questions populate into the Q&A box. Okay, so a number of questions have come in, and again, feel free to continue typing any questions into the Q&A box here. Some good questions, actually. So I think one's a really timely question and really helps to set the stage for 2023. So the first question is, are your clients hosting in-person or virtual annual meetings? And are smaller cap companies moving to virtual meetings for their annual general meetings? It's a good question, and it's not limited to annual meetings. It's also road shows and conferences. As we all know, during the pandemic, the height of the pandemic from 2020 through 2021, early 2022, investor relations went virtual, right? All conferences were virtual, all road shows were virtual, IPOs were virtual. Secondary offerings were conducted virtually. It was quite amazing to see the shift. All these companies who previously going public through initial public offerings had done these traditional roadshows in New York, Boston, San Francisco, Chicago, et cetera, and had met face to face with investor after investor. Now, conducting IPOs and raising capital through secondary offerings and pipes and so forth were all done virtually. It was pretty amazing experience. This year, I could say our clients are kind of doing a bit of half and half. So a number of our clients that typically don't get a big turnout for their AGM, they're going to virtual AGM meetings and conducting everything through through Zoom or Teams or through conference bridges. And conferences, it's kind of half and half. Some of these conferences have remained virtual. There's obviously a lower cost to put on a conference for a conference organizer to do it virtually versus, I was at the Marriott Marquis Monday and Tuesday for the bio conference. Obviously, very expensive to put on a full blown conference, at a hotel in Midtown Manhattan. But it's a trade off, right? There are a lot of cost savings and convenience factors to doing things virtually, whether they're an AGM or a road show or a conference. And a lot of people are saying, they're very happy to be back in person, even though it's less efficient in terms of their time. It's more efficient in terms of, building those relationships, particularly if it's with existing investors or prospective investors. Maybe it's your research analysts and so forth. And I think we'll continue to see a bit of a mix going forward, from 2023 and beyond. But thanks for that question. Let's see, another question. Another good question. Thoughts on public company engaging with investors via social media? Any do's and don'ts? We advise our clients, and Skyline we use social media as well, even though we're a private company. We advise our public company clients definitely to engage in social media, but to be thoughtful about it, right? So a lot of companies come to us, and you'd be surprised. A lot of our clients come to us without any social media channels. They don't have LinkedIn, they don't have Facebook, they don't have Twitter, etc. So we'll come in oftentimes and help them create those social media accounts. A lot of it depends on the industry. Certain industries just weren't used to using social media to communicate with investors. So we'll see that pretty commonplace in certain industry verticals. And then a lot of times it depends on the age of the management team. If it's an older management team, they're not as engaged or adept at social media. So we do a lot of that work in terms of helping them create their accounts, helping them with strategies to build followers, and then we can also help them create content. We advise clients not to just post for the sake of posting, just for frequency. We advise our clients it's more about quality than quantity, because we believe that our clients, our public company clients, they should be utilizing social media to inform and to educate, and not to just populate information that may not be that impactful or meaningful. Investors or potential investors following a company on social media, we feel that they deserve thoughtful posts, thoughtful commentary, maybe on macro trends, maybe on industry trends that could be really interesting. So if they're following a biotech company, or if they're following a software services company, we encourage our clients, and we can help our clients point them to information, help to create posts for them based upon really interesting trends, perhaps in the industry, that could be relevant or could be beneficial down the road to our clients. And that helps to point your followers on social media to thoughtful pieces that they may not have seen, that provide some granularity and insight into the industry. It also shows that the company is on top of things in the industry. If I'm an investor, I'm more likely to invest in a company that has thoughtful commentary and thoughtful posts on the macro environment or on the industry itself. It leads me as an investor to believe that this company is informed of what's going on, they're paying attention, and they're able to benefit from certain positive developments and avoid certain pitfalls. A couple questions about Skyline in specific. Specifically, do we represent Reg A and Reg D companies, and do we work with private companies? The answer is yes. We do work with companies that are private, that are raising capital through Reg A or Reg D offerings. Some of our public company clients, conduct Reg A and Reg D offerings as well. We do work with, we do have quite a few companies that are private. Most of, if not all of the companies that Skyline works with that are private, they're all intending to go public, right? So with a few exceptions, most of our private companies are in registration. So they have an S1 or an F1 on file with the SEC, or they're planning to file a registration statement for an IPO, or they're the target of a SPAC merger, for instance. We have a couple clients that are potentially merging with SPACs, so they'll be S4 filers. So we do, but we really like to work with companies that have that vision and intent to be public in the next 12 months or so. A lot of companies come to us pre-IPO, and we work with these companies to really look at their written assets to make sure that before they conduct the IPO, they've got a great website. They're SEC compliant on the website, ADA compliant with their website. They've got a great PowerPoint, really good messaging, good graphics. We help them to write press releases. Oftentimes they've never written press releases before. Get a few press releases out, even when you're a private company, and start to set up the social media assets. Make sure they've got a number of social media accounts, at least LinkedIn and Twitter. Those are probably the two most important social media sites for a public company to have. Making sure they have those assets in place, help them to grow the followers, so that when they get ready for the IPO, and investors want to learn more about the company, as I just mentioned in this presentation, they'll go to the website. They'll see a great website. They'll be able to download a PowerPoint from the website. They'll be able to see some recent press releases. They'll be able to see some activity on social media. So those are all really important things that we do to help companies prepare for going public. And I think I'm down to 1 minute. So my friend Phil here has jumped in with a question. And let me quickly answer his. The world seems to have changed so much when it comes to phone calls and emails. Do you think that phone is still the most effective means of communication? As I mentioned earlier, I think it's going to be a bit of a balance between phone calls, Zoom calls, and team meetings and in person. And there are certain benefits and drawbacks to each, and a number of our clients are engaging in both of those modalities. Apologize, I don't have time to answer the other questions that have come in. A number of other great ones have come in, but feel free to reach out to me directly with the contact info on your screen, and happy to follow up with any of you one-on-one. Also, feel free to schedule a one-on-one with myself or members of our team through the portal here on the conference dashboard and website. And again, thank you all for your time and attention today. Enjoy the rest of your conference.